Hey there, I'm going to talk to you about USDA loans today. All right, so first and foremost, USDA loans are loans that are endorsed by the US Department of Agriculture. Now, even though it's the Department of Agriculture, they're actually not designed for agricultural properties. USDA loans are designed for rural housing. Okay, one main reason that they're designed for rural housing is ultimately the USDA loans are out there to stimulate the rural housing market. They're out there to make it a little bit easier and more affordable for people to get housing who don't live in major metropolitan areas. So a lot of times, uh, people are going to be not making as much money out there. They're not able to save as much money out there. There's not as many jobs out there in the rural areas. So the government kind of stepped in and wanted to try and make it a little bit easier for people to get in houses. How do they do that? They made 100% financing available for people out there, meaning they don't have to necessarily save money for down payment and all that stuff because, again, there's just not as many jobs, not as much income out there being made in some of the more rural areas. Now, one of the main reasons why it's designed for more residential housing instead of agricultural housing is because a lot of the ag properties, if something's zoned agricultural, they actually have different foreclosure laws. Okay, so that's why you're going to see these more towards just the smaller residential homes in the more rural area. And because they're designed for stimulating that rural housing market, you're going to see things like there's two main qualifiers out there for USDA loans. One of them is income limits. They do have income limits for every single county. Okay, so if you make too much income, they're going to expect a down payment. You're not going to be able to qualify for a USDA loan. One of the main caveats of USDA loans, opposed to some of the other programs out there that do have income limits, is USDA is going to look at the total household income. That's right, the total household income, not just the qualifying income for the loan. So if you have other people that are living in your home that have income, they're going to consider it. If you have income that you don't want to use for the loan application, they are still going to consider that for the USDA income qualifications. Okay, so it's a little bit different qualifying. They're going to ask about any and everything in regards to income to make sure you qualify. Okay, the second big thing that they're going to look for is there are property requirements. You can go to USDA.gov and pull up the property eligibility map. Looks like this. And in that case, you can see if you are shopping in a USDA area. Again, the income limits are online too, so you can kind of check that out or get with your favorite mortgage broker and we can go help you make sure you're looking in the right area for USDA. In addition to that, it is a government program. A lot of the government guidelines kind of stay static throughout a lot of the government loans. Okay, USDA is really, really close to mirroring the guidelines of FHA loans. Okay, the Federal Housing Administration monitors and endorses the FHA loans, but because of that, the mirroring those guidelines, you're going to kind of have the standard, what we call the 2 years, 2 months rule. They're going to look at the last 2 years of income for qualifying. Okay, they're going to look at anything in regards to overtime, bonuses, commissions, whatever, employment history. They're going to look at the last 2 year snapshot. Okay, so the more conventional paper and stuff like that, they get away with more of the 1 year look. But on the USDA stuff, you're going to look at the 2 years, and then again, the 2 months is going to be assets. Whatever you're using for your down payment, whatever assets you need for the loan, they're going to look at a 2 month snapshot. Some of the more conventional guidelines, a little bit looser, look more just at 1 month. Last thing I'll talk about the USDA stuff is property requirements. USDA, again, they kind of mirror some of the FHA property requirements. I know a lot of realtors, a lot of people out there like, oh no, FHA property requirements are so much stricter. But there's just a couple easy things to look out for. Okay, government loans, they really, really have an issue with peeling paint. So check the exterior of the home, check the deck, check the trim on the windows, and make sure there's no peeling paint out there. If there is, you're going to have to remedy it. You're going to have to throw a coat of paint on there. Not a lot of lenders like doing escrow holdbacks, so try to get out ahead of that before the winter's time and before the paint freezes up and all that fun stuff. So get out there and tackle that peeling paint. In addition to that, government loans, they need access to any crawl spaces. So if you have a manufactured home or anything like that, there's a crawl space under the house. Appraiser's got to get under there and take a picture. In addition to that, if you have an attic, same thing. Can't be sealed up. Appraiser's got to get up there, take a picture, make sure there's no mold or no infestation going on up there. In addition to that, a lot of stuff is again on the USDA side more rural. You'll run into things like wells and septics and things like that. There are specific distance requirements for those. So if you're out in the USDA area shopping for a home that has a well or a septic tank, just ask your realtor. just make sure that the distances are checking the box. Really easy way to check that is to also ask, is your current home financed through FHA? Okay, because ultimately, if it is, or with USDA, because if it is, the requirements are probably the same. Okay, they've been the same for a while on the septic distance, septic and well requirements. Moving a septic tank or a well is not easy to do. So if it was compliant before, it's probably still compliant now in regards to the distance requirement. But outside of that, that's a lot of the basics of the USDA loan. One big thing too, it is largely just a purchase only program. Okay, you cannot refinance into a USDA loan. They have a streamlined product available if you want to, if rates are better than when you purchased it, but you can't just do a cash out and go into a USDA loan. You can't say, hey, I bought a conventional, yeah, I want a USDA loan now. Can't do that. It's largely just a purchase product. Um, Again, it's out there to help stimulate the rural housing market, help facilitate and move real estate outside of the large urban areas. Okay. Hope you learned a lot about USDA loans. If you ever have any questions, reach out to us at M&M.